We're going to pick up right where we left off, talking about lazy trading and just how it can be very profitable. Hello, I'm Robert, and welcome to my channel. Let's get straight into the chart, and we see on the chart that we have a position that we've been following that is in a profit right now of $1.95. Let's look closer at the chart though. Let's actually zoom in, and we can see the red lines where I marked the trailing stop loss. And we see right now the little orange line as it has moved down against the actual price. This is actually a wonderful situation because it gives us something that we can talk about in terms of what's going to happen next. As we look at this market, let's see if I can really zoom it up. There we go. We see yesterday's candle didn't go above here and it didn't go below here. We see that this candle stayed pretty rigid. And we see that today's candle is pretty much the same way. Which means, realistically, this price is going to go back up. And when it hits the orange line, we're actually going to go into a loss. We're not going to make a profit because right now the market does not have the pressure to push price down further. So that means we either move our trailing stop loss or we just close out the position. Personally, I would normally close out the position. I think that is the best approach because I don't think the market is going to get any better. So that is what I'm going to do based upon what I see on these candles. They are telling me that we have reached where the market is going to give me, and realistically, this is the best I'm going to get. So if I want to capture any profit, now I should get out. Now, as I mentioned yesterday regarding the regular stop loss and the trailing stop loss, both of them are based upon precision. We can see from the blue line where I got in the market, not the ideal place. Had I gotten into the market up here, I would have had better profit. But realistically, shoulda, coulda, woulda doesn't go anywhere. Had I sat there and watched the chart for 8 hours or 12 hours, maybe I could have gotten a better position. But that's what leads to stress and anxiety. What I am demonstrating here is the lazy way of trading, the relaxed way of trading, the way of trading that simply is carefree. Now, what if the market goes completely down, completely against my decision, and it just takes off? It doesn't matter. I have booked a profit. I have a nice, clean profit. The worst thing you can do in trading is try to chase profits. I've got $1.81. My balance is back up to $9.99.56. I am about 44 cents away from my original balance. That's fine. I've got a profit. I'm good. Never chase profits. Never ever let fear drive you. Never chase profits. Never fall into FOMO. Never think you're going to miss out on an opportunity. That's not what trading is about. That's the kind of gimmick that causes you to lose your money. So this is a bad place. This is a horrible place to open a position. But I'm going to do it anyway. I'm going to open a position. I'm not going to put a stop loss. I'm not going to put a trailing, and I'm not going to put a take profit. I'm simply going to open the position for whatever it will do. So now let's simply take our position. The whole point of lazy trading isn't about where you open the position. It's about how you manage your risks. So as we look at our risks, we have the situation where we need to actually think about a few basic rules. My rules are simple. I like trading with multiple positions. I will purchase more than one position at a time, and I will simply let the market happen. This isn't about being perfect. I don't have to be perfect. All I have to do is be consistent. Stop losses require precision and a more perfect entry. What I'm about to show you over the next several videos is just the opposite of that. Taking trades when trades don't make sense, and yet coming out ahead. The one thing that is critical is you need to have an absolute limit. My limit is 10%. I will not go above 10% of my budget because that will give me 40% of my budget for the market to breathe. If your if your margin touches this little line at the 50% zone, you enter into a margin call and quite possibly a margin closeout. You lose your account. So my goal is no more than 10% and let the market breathe for 40%. Now that means being careful where I buy, which is what I spoke about in the very first video. Never buy without a good reason. And in my case, the reason for doing this is we are at the bottom right now, but last week the price went lower. I don't expect today to go anywhere because we can see that it's pretty well fixed within the limits of yesterday. But tomorrow is a different story. Tomorrow, the market might go back down to what it was last week. I'm not trying to guess where price is going because I don't know. I am simply letting price go where it wants to. And we are still close to the upper level resistance line That is the place that sellers don't want price going above. Yesterday, the buyers drove the price up. Today, the sellers drove the price down. That tells you that right now, the equilibrium of the market is roughly in this area. I say roughly because at any given moment, that can change. The buyers may drive price up tomorrow closer to this area. Then again, the sellers might push price closer to the lower area. Don't try to predict the market. Never predict. Never try to predict where the price is going to go. It can go up, it can go down, it doesn't matter. Never predict. Simply flow with the market and take it as it goes. So right now we have one position. Let's see what happens tomorrow. Now there's no take profit, there's no stop loss, so it will just sit here until tomorrow. Please like this video if you like this kind of content so it can help grow the channel. Leave me a comment. What do you think? Share your thoughts with me. Thank you for watching.